It's time now for our Muni moment. And last week, Bloomberg had a great interview with Jamie Dimon where he warned that Texas risks undermining its business-friendly reputation with laws designed to punish banks for policies that limit work with the gun and the fossil fuel industries. Bloomberg's Danielle Moran spoke with Dimon, and she joins us now. And to start, first of all, give us an overview of what these Texas laws actually are and why it has Wall Street in such an uproar.
Definitely. So in 2021, Texas passed two pieces of legislation that has really impacted my market, which is the muni bond market. And essentially what their goal was to limit business, public contracts with companies that they believe don't adhere to their philosophical values. So it was two pieces of legislation, one which bars any type of public contract over a certain amount with companies that, quote, discriminate against the firearms industry, and another piece of legislation that does a very similar type of thing with companies that boycott fossil fuels.
This gets to a broader issue, though. We're talking about relatively large banks that obviously have a lot of different interests. And is Dimon sort of making the point that you can't sort of have one component of the business sort of be completely separate from the other component of the business? If that is the case, then what is the future for JP Morgan in Texas?
So Dimon was very clear that they don't discriminate, they don't boycott, they don't halt business relations with any industry just for the purpose of what the industry does. So he said that they don't do either of the things that Texas may suggest that they do, and they're heavily invested in Texas. They have over 30,000 employees in the state. He made that quite clear, and they have a very large presence in the Dallas-Fort Worth area, and they want to continue that business relationship.
That's where I wanted to go. Put Texas in context for us. How important is Texas to the overall muni industry?
Texas is a huge part of the muni bond market. This year, it's the largest segment. It has over $52 billion worth of bonding, and that's really because Texas is booming. It has a huge population growth, and that population needs schools, it needs roads, it needs airports. So all of this issuance is coming out of Texas, and that's why it's really important to these banks to continue to do business there.
I'm curious about the flip side of this, meaning the cost to Texas itself. I mean, we just had the list of, I think those are all the banks that are under review, if you will. Two, I think, Wells and RBC have effectively been told to go kick rocks. And if you take out the other 8 banks there, I guess the question is who's left. And I don't mean that to be glib or facetious here, but I would think you would want more competition, because in theory that would lower the costs for the municipal borrowers. But if you've got fewer players, those players are going to have a lot more leverage to basically tell you to take the fee and shove it.
Well, that's what's really
interesting. And I mean that literally.
Yeah. That's what's really interesting. So to be clear, Wells and RBC haven't been told to kick rocks yet. Okay. They're under review with about 10 other financial companies from the Attorney General's office. And I think that's really at the crux of this argument. If you limit competition, does it...
Was that the same Attorney General that they tried to impeach, or am I thinking of someone different?
It's the same one.
Okay, just checking.
And so the thesis is that if you limit competition, it raises borrowing costs for governments. And with all of this issuance coming out of Texas, that's of a real concern, especially in this rate environment where borrowing costs is already so high.
So you spoke with Jamie Dimon, obviously JP Morgan pushing back against this. Is there any reason to think that Texas will change its stance at all, or is this basically set in stone here?
Well, these are two laws that were passed. They were passed by the Republican-controlled legislature, and they were signed into law by the governor. Jamie Dimon's warning to Texas, which was a subtle warning, but one nonetheless, was that Texas historically has been very business-friendly. They have seen a lot of corporations move there. They have great incentives for corporations. And he said, if you would like to continue that, I urge you not to go down that path.
What's the news, though, when we look at what we read on the Bloomberg terminal earlier about Citigroup basically shutting down or considering shutting down their municipal operations in the state there? Is that also directly tied to this, or is this something a little bit different?
So Citigroup said that that is not directly tied. My colleagues on the finance team had a really great scoop out on Friday that talked about how Citigroup is considering cutting its municipal bond business. Citigroup said that that's tied to the profits that the business brings in and isn't related to the Texas part of the equation. That being said, as I mentioned before, Texas is a huge part of the muni bond market. And before Citigroup, before these laws went into effect in 2021, Citigroup was the leading manager in Texas. So it obviously had an impact on their margins.